In a busy world, one values a taste of luxury and leisure. From the casino to the golf course, this company is investing in the American appetite for entertainment. Will investors value a real estate trust that aims to make hospitality hot?
A couple weeks ago, we learned that Eldorado Resorts is buying Caesars Entertainment. That's the company behind Caesars Palace for $8.6 billion. It's creating a major new player in the casino space. However, you might have missed that this transaction occurred pretty much simultaneously with a smaller deal that I really like, the Vici Properties real estate investment trust company that we had on before. It owns the land under many of the Caesars Palace locations. They also acquired 3 properties from Eldorado for a total of about $3.28 billion. There's a lot more to it than that. We're going to go over it. I think Vici is the slow and steady way to invest in the casino and gaming spaces, especially since the stock sports a 5.2% yield, which is increasingly attractive in this low interest rate environment. And apparently people agree with me because the stock's up 18% for the year. Can it keep climbing? Let's take a closer look at this one because we've got Ed Pitoniak. He is the CEO of Vici Properties. You get a better sense of where his company's headed. Mr. Pitoniak, welcome back to Mad Money. Good to see you, Ed. Good to see you.
Good to be back.
Thank you. I remember when you first came on, have a seat, and I said, wow, this could be like EPR, an experiential real estate play. And it has been remarkable. And yet at the same time, it's got less risk than when I saw you last. How have you been able to do that, even though you've been making big acquisitions?
Yeah, well, you know, since I was here a little over a year ago, we've done about $5 billion of transactions. We've raised about $3.2 billion of equity, coincidentally with a number you cited a moment ago. We've added new tenants in Penn, Hard Rock, and Century. And I think what we've been supported by is this understanding that this is the cheapest great real estate on the planet right now in terms of being a place where experiences are taking place that Amazon has not yet figured out how to put in a box and ship to your house.
Yeah, I'm so glad you pointed that out because many of the real estate investment trust candidates from when we started the show almost 15 years ago have fallen on hard times, and not because of management, but because other companies have come in and hurt them. Meanwhile, there are secular trends that I think are helping you experience online gaming. Turns out to be gaming, and it tends to happen at the places that you own.
Exactly right. And when you combine that with the proliferation of sports betting across the country, it's really the way in which the next generation of guests for these properties are going to emerge. And when you look at the larger culture and this desire to gather, we saw it yesterday in the World Cup, right?
Right.
The thousands of people who turned out to watch a game on a big television together because it's such a much richer experience when it happens in a place that's animated. And our operators are really the best, I think, on the planet at creating that experience that you are so compelled to leave home for.
In the meantime, you also, since I've seen you, geographically, really fabulous diversity.
Yes, yeah.
All over.
Yeah, we've since I met with you, we've added a property in Louisiana with Penn. We've done 2 deals with Dan Gilbert's great gaming company, Jack.
I know. I hope he's doing well.
Yeah,
we hope he's doing well.
He's tough, man. Yeah. He's going to do well. But we bought Greektown in Detroit, a market we really like, and Jack Cincinnati, where we'll partner with Hard Rock. And one of the things we like about those 2 assets, as well as the New Orleans asset that we're going to buy here in the next year or so, is these are downtown assets. You know the gaming landscape well, Jim. There are very few true downtown casinos in America. Right. And in the last year, we've picked up 2 of them. You
know, that Harrah's New Orleans, which I've been to many times, and unfortunately, I think they're getting rid of the smoking, which is because I never liked that, nor the casino player. But that is a property that's 1 in a million because the number of people who go to New Orleans every single year keeps going up very big.
It does, and it benefits from so many of the tourism and demand drivers that Las Vegas also benefits from. It's got a great big convention center. It's a very popular convention destination. Needless to say, a phenomenally successful tourism destination. When you take all those demand drivers and funnel them into really one and only one downtown casino in New Orleans, we are going to be very happy the day we get the keys to that.
Now, you've lowered the leverage tremendously. Are there more things to buy? Because we know that the real estate investment trusts we like have that continual growth.
Yeah, well, one of the important things we achieved with the deal we announced 2 weeks ago today, Jim, is that we restocked our growth pipeline. So we have an agreement with the new Caesars, once Eldorado takes over. We'll have a couple of properties we can eventually call in Indiana, great properties in Indianapolis. We've acquired 2 right of first refusals on Las Vegas Strip assets that we think will have tremendous value. So we've got a growth pipeline going forward in gaming we're very excited about. And then the day will come when we will go outside of gaming and think that we will be able to capitalize, much like EPR has.
Because that Top Golf is a good outfit.
Oh, they've done phenomenally well.
Right. And you've got the golf courses that,
Yes.
you really have got a great pedigree. Now, last time I saw you, I was concerned that you were so concentrated with an outfit that I was worried about the balance sheet. Caesars, that's been cured. Right.
Yeah, and it will get even better.
Okay.
So Tom Reeg, who the CEO of Eldorado, who will be the CEO of Caesars, is an old distressed debt guy, an old credit guy, and smart credit guys are really focused on credit quality. And Tom has announced his ambition to restore Caesars to investment grade.
Oh, great.
Right.
Okay.
And you know that for a REIT, for its biggest tenant to be investment grade, it becomes what's called in commercial real estate a credit tenant.
Right.
That is another step in getting us to the blue chip status we want to.
And I think you have to understand that you're getting both price appreciation here if that happens, and also this terrific distribution that I have much less worry about. Not that I was worried because you did a great job when you were here last, but I love how things have changed for the better. People keep telling me I should ask you about this right of first refusal. It's more important than I realize that this could be good growth too.
It could be. Right now, Caesars has 25,000 rooms to fill every night in Las Vegas. And Tom Reeg has recognized what a number of people have recognized, which is this is more rooms than perhaps we need. They've got the biggest, they already have, but they will moreover have when you have the combination of Eldorado and Caesars, the best regional footprint in America, which is, again, going to be in a unique position to capitalize on the proliferation of sports betting. But that spoke system, if you will, is feeding a hub that's frankly bigger than it absolutely needs to be. And it could become, and it remains to be seen if it will, it could become a means by which Caesars continues to improve its balance sheet and optimize its portfolio, at the same time giving us a chance to own more strip real estate.
Well, I like the growth. I like everything you've done. You've just been a terrific operator, and I wish you the best of luck. This is one that yields 5%, and you're one that 10-year yields 2%, and I prefer these properties. That's Ed Pitoniak. He's the CEO of Vici Properties. That's V-I-C-I. Yes, a little Latin there. Thank you, Ed. Great to see you.
Jim. Good to see you.
Mad Money back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.